Welcome back to TechKidFX for another Agix price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Agix chart, which at the time of this recording is holding below the 20-day MA here on the 4-hour chart, which is now acting as resistance. We are also holding below our significant high at around the $0.5 mark. We have also continued to obey the Elliot structures, where we had been seeing a massive breakdown to the lower side in the formation of this wave 2 in a move that managed to get into the minimum retracement area, which lies between the $0.3569 mark and the $0.2869 mark, in a move that gave us a low at around the $0.28526 mark. And having managed to get into the minimum retracement area in the formation of that wave 2, I believe we have bottomed out in the formation of that wave 2, and whatever we are seeing at the moment is the start of a massive run up to the upper side in the formation of this wave 3, and all this is playing out after we fully peaked in the formation of a larger Elliot wave count 1, and that is after seeing the formation of this 5-wave structure to the upper side, having the wave 5 giving us a high at around the $0.67 mark, and also completing the formation of that first wave to the upper side. And before we started our Elliot wave structure, we had been seeing a bit of a massive run up to the upper side in this one to set up to the upper side before we started our Elliot wave structure. And before I get further into the technical analysis to give you the short-term scenarios and also sketch out my target areas to the upper side in the formation of this wave 3, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership, and allow me to first sketch out a target area to the upper side in the formation of this wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, and that now gives me a minimum target area to the upper side in the formation of that wave 3 at the fib level 1.618, and that is at around the $1.32697 mark, and that is the minimum that I'm expecting that wave 3 to the upper side to do. And in the formation of that wave 3, which is also an impulsive wave, I'm also expecting to see a 5-wave structure in formation within the formation of that wave 3, having the wave 5 fully maximizing our target areas and also giving us the high for that wave 3 to the upper side. And it is this micro Elliot wave count within the formation of this wave 3 that is going to give me the short-term scenarios that I'm expecting to play out here on the Agix chart. And I believe that is better seen here on the 1-hour chart, where you can see that I have this Elliot wave structure in red, having that is the first wave, then a wave 2, then a wave 3, then I'm expecting a wave 4, then continue gearing up in the formation of this wave 5 to fully maximize our target areas in the formation of that larger Elliot wave count 3 to the upper side that I've shown you here on the 4-hour chart. And getting back to the 1-hour chart to get to the short-term scenarios, since we have peaked in the formation of that first wave to the upper side, we have also seen a corrective structure in the formation of this wave 2. Whatever we expect next is the start of an impulsive wave to the upside in the formation of this wave 3, and I believe that is what is playing out here on the Agix chart. And in the formation of this wave 3, I'm also expecting to see fractal waves in formation because of the impulsive nature in the formation of that wave 3, having the wave 5 fully maximizing our target areas. And I believe Agix has been obeying that, where we have peaked in the formation of this first wave of this Elliot wave structure in blue, and whatever we are seeing at the moment is a corrective structure in the formation of this wave 2, and using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, I was able to come up with a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.78, which is a target area at the time of this recording we have fully maximized. And there are chances that in case we continue holding within this blue target area, then we are going to see the low for that second wave within the blue target area and continue gearing up in the formation of these larger Elliot wave count 3 to the upper side. And for that move to also play out, we need to regain the 20-day MAs both on the 1-hour chart and also on the 4-hour chart, and also see a break above our significant high at around the $0.5 mark, continue gearing up, and also see a break above the high that we made at around the $0.5912 mark, in what could be the start of the formation of this wave 3 to the upper side. And that is the first possible scenario that we can expect over here. But in case the breakdown continues, we get back to the lower side of this blue target area, and maybe at some point we break out of this blue target area, and that means losing the fib level 0.78, then that will be putting a major challenge on the formation of this second wave to the lower side. And because of that, I have an alternative scenario that could be obeyed by Agix in case we lose this blue target area right here. where we can term this whole structure to the upper side, giving us a peak at around the $0.59 mark is the formation of a first wave to the upper side. So we can term this whole structure as a larger Elliott wave count 1 to the upper side, giving us a peak at around the $0.5912 mark. And whatever we are seeing over here is the start of a corrective structure in the formation of that wave 2 before we can continue gearing up in the formation of that wave 3, then expect a wave 4 and then a wave 5 to the upper side. And the difference between the two possible scenarios is the target areas that we need to continue holding within on the Fibonacci's for us to start our massive run up to the upper side in the formation of that wave 3. So in case we lose this blue target area, then we need to watch a new target area that I'll be giving you in this video by connecting the Fibonacci's from the low that we made at around the $0.287343 mark to the high that we made at around the $0.59465 mark, and that now gives me a new target area in the formation of that wave 2 between the Fib level 0.5 and the Fib level 0.78, which is a target area that lies between the $0.4407 mark and the $0.35264 mark, and that is the new target area that we need to continue watching in case we see a break out of our blue target area down here, which lies between the $0.5 mark and the $0.45425 mark. So in case we lose the area at around the $0.4525 mark, then we need to continue watching this white target area between the $0.4407 mark and the $0.35264 mark, within which we can expect to see one more leg down in the formation of this wave 2 before we can continue gearing up in the formation of that larger Elliott wave count 3 to the upper side. And those are the two possible scenarios that I have here on the AGX chart, having different target areas on the Fibonacci's that we need to continue holding, but on the long term we are expecting the formation of that larger Elliott wave count 3 to the upper side. And also taking a look at the indicators on the RSI, we are trading at around the 38 mark, meaning we have massive room for us to fully support higher prices in case the reversal happens, but in case the breakdown continues, that movement to still be supported. Also taking a look at the MACD, we have been able to print a bearish cross suggesting further breakdown, so let's be patient and see how that plays out, and I'll be keeping you updated.